Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It's great to be back. Thanks for everyone's well wishes with the Boston Marathon. It was a great weekend. I'll tell you what, drama creates memories. It was hot, and it was a battle. But all in all, a lot of people raised a lot of money with the race. A lot of people performed real well. Sometimes in trading, you go from trading performance to trading management or trade management. So that's exactly what this weekend was. It was, instead of race performance, it was race management. So all you had to do is be happy with the outcome. All in all, great weekend. Anyway, getting back to the markets, I definitely watched it from afar. I tried to tweet a little bit to, give some thoughts on all the, on the day's action here and there. Evan did a great job holding down the fort with our co-hosts. And at this particular point, today was an interesting day. Yesterday, you had your divergence where the S&P did somewhat of a red dog reversal where it traded through the low, came back above, created a higher low, and the NASDAQ lagged. I think that obviously the market likes to make everyone feel as stupid as possible. And yesterday, I think a lot of people tried to be involved in some of the big mega cap NASDAQ names or the high beta names yesterday, so it made it harder for them to go back to them today, whereas I was not in yesterday. So today, I came in with a fresh head, fresh thinking, and I was, all focused in on Apple. But before we get to there, let's take a quick look at the indices and see where we're at. As far as the SPX, I see a lot of people drawing their line in the October low from the actual tail, not from where it came back above the previous low. So if you look at this trend line, and you do connect all the lows from the low of the low, because everything's not a perfect science, here is where this macro trend actually wound up going down to. This was that low, okay, of that Tuesday, if you remember. Okay, from that day, you remember we had the 2-day snapback, and then it was met with some pretty intense selling. This was Friday, and then yesterday, you take a closer look here. You had a mini reversal, nothing so extreme, so crazy, but it went below that 1369, put a low in at 1365, which was above the low here of 1357. And then today, technology joined the rally. You had some power in the S&P, and it actually reclaimed these moving averages and also took out this 2-day move. And in essence, also filled the gap from this day, which was, I believe, what was this, April 9th? Okay, that was when, we gapped down and there was no gap fill there. So with that said, I would have to say that anyone that just has an idea saying we have to break these lows, we have to hit 1340, we have to go down to 1312, I think you can't just have that opinion with the way we've bounced back. Yes, there hasn't been a ton of volume, and yes, at this particular point, I think it's just more of a neutral where it's very stock specific, very, like your selection abilities have to be there. You could have longs, you could have shorts. Depending on the day, it's either working or it's not. So at this particular point, I do think if you go back to the chart, the bears would probably be a bit on the ropes if we start reclaiming, just say this, this 1400 to 1403 area. It's already come up a little bit more than the bears would have liked. I would have thought that, this high would have contained it. I came in short the spiders as soon as we traded over. Yesterday's high, I just covered them because I didn't want to be involved. I was looking more on the long side. And then again, if you take a macro look here, here is, the more of the intermediate trend. Okay, if you follow it a little closer, this is the trend that I follow. This is when I pretty much went more short than obviously long. Here is where IBD put us in a correction when we were talking about it, and here was the break. This was the market under pressure. Here is your market correction. Here's the break. And now we're coming up for the retest. So, sometimes, they push the envelope a little bit more. But again, don't try and forecast too much because it doesn't make much sense. If you look at the Qs here, the Qs overall came down to the 50-day, right? Came to the 50. The SPYs broke the 50-day and reclaimed it today. The Qs that have been the strongest indice just negated yesterday's action. So yesterday, yeah, everyone's saying tech is lagging, it's so bad, blah, blah, blah. PS, we made a little bit of a higher high. We went above yesterday's high, which showed a little bit of power. You do have this somewhat of a downtrend here that is the next optical, so we should see, or obstacle, sorry. But all in all, from the highs to the 50-day, it's still somewhat constructive. We still only pulled off in the S&P, 6% off the highs, and the Nasdaq even less. So today, if you remember before leaving, I was really focused in, I was hyper-focused in on Apple, because on last Wednesday, Thursday, when we had that snapback, that was the first time Apple did not lead the market. It was the first time it actually lagged big time, where it was telling you, I'm weak, guys, and people didn't want to believe it. A lot of people were saying, why? If you look at the what was going on instead of the why, the what was going on was market was bouncing back hard, Apple was being sold off, you had a big support at 622, it broke below the 10-day. That was telling you what was going on, that it was weaker, that you should be out of some longs and potentially look short. Now, by no means did anyone think it was going to go from 622 to 575, and obviously people covered early and you took your trade along the way. Some people held better than others, some people got shaken out. That's up to you to actually look at and examine. But same way today, I came in, I was on the radio at 9 o'clock, I got the handoff from Sperling at 9:15. I said, guys, do not short Apple through the low. Especially if you have not shorted Apple the last 3 days through the low, today is not the day. I'm looking for a red dog reversal through 578.25, maybe 575, because that's the gap. It might push it in. People are going to press, look for that extra juice, and we know that juice is slippery. But I'm looking for a reversal. I'm looking for a bounce. And did I think it would go to 610? No. But you don't have to know where it's going to go if you start off on the right level. You start off with the right direction, and then you trade it. I got long 575, 578, sold 585s, got back in 582, sold 588s, got long 588, and I held to the rest of the day, because it proved it can go higher. So if you look here at the chart of Apple, you will see, this is when it broke below this trend line. This is when it gave back the 10-day, broke below that 622 we talked about. A lot of guys covered into here, which made sense. Look at the support. And then those, thought that, it would hold, obviously got stopped out, because that's what the market likes to do. So today, when it traded below the low here of 578.25, you could have bought it once it went back above. And if you just trailed it and stayed with it, you made a lot of money. If you traded it, looked for your intraday setups, you also could have made a lot of money. It all depends how you want to do it. And now you have a little resistance right here, right? This is your 610 area. Today's high was 610. I think IBM and Intel were out after the close, and they were being sold off a little bit. So if we open down, what I'll do tomorrow is I'll go to my 5-minute chart, okay, and I'll draw some lines of support. So if we open up down, I think with today's action, there could be some buyable areas. You have 605, that might be buyable if we open down, and then you take more of a further look to the downside to see, where, if they want to shake the envelope. This was support. And then coming into here. And I would say if Apple's any good, there's no reason why it probably doesn't even get down to here, but it should not break this 596, or actually 594 to 596 area. So at this point, it was definitely prudent to take some trades, along the way. That's where that line was from, by the way. I didn't see that. But, there was no reason why you shouldn't have gone out and long some. And then, I don't know why, Laz uses a few different moving averages than I do. But if you go back to your basic studies, you go to your moving average, which is right here, you will see that you could say the 10-day now is right there at 619, and the 20-day is, I think, around 614. So that would be an area to retest this zone where you could sell. Anyway, let's move past Apple, because I came back today and I really didn't get involved with many other things, but you didn't have to, because I was out of the office. I did see that Goldman Sachs reported earnings. It looked as if they were good. Goldman, didn't trade that well. If you want to go put a feather in the bear's cap, okay, so far right here, this is somewhat of a feather in the bear's cap. It opened up, traded lower. You now have this mini range here. You still have some room to the bottom end. So I would watch this pretty close. If all of a sudden Goldman starts to break below 115, it's going to be hard for the market to rally. Maybe you need some inside days and it has to, absorb and do what Goldman does, which is trade like crap to me. But anyway, remember I said, look at this big up day, met with a huge down day. That's why I don't trade it that much anymore, because it doesn't make much sense. JP Morgan also, if you want to look at something that could, this is actually a little bit better. I remember talking to Vicky from on my way to Boston. I'm like, we just had the oversold move in JP Morgan. I would fade the up open. I think it was up 20 cents and then got crushed. So at least now you have some type of support level to trade against. Here's somewhat of a downtrend. It's still pretty lethargic, but this could give us clues on what type of move we have moving forward. Also in the market, JP Morgan looks a little bit better than Goldman Sachs right now. I will say the casinos got a little weaker. I'm not in there right now. LVS did try and put somewhat of a shooting star top here. The bears didn't have enough control to make it red. It probably would have been better if it was, because technicians would have said it's a time to sell some. Now he came right back into some support. So this is definitely a bit of a choppy trade. It's still a macro long. I'm not saying run for the hills, but as a short-term trader, it's getting a little choppy. Today, if you tried to get long it, it opened up $1, got crushed, and then came off the lows. It's choppy. Just know your time frame. I didn't get involved today there. Win, take a quick look. If you go across the board here, Win still doesn't act great. It's, I guess, trying to tighten up ahead of earnings. It's going to need a nice earnings report. I would say this earnings report is not factoring too much upside, meaning like it's not, if we do get a good earnings report, it should go, because it's not pricing in any type of huge move. If it was, I think it would be higher. That 128 is going to be a pivot there. If you want to look at some other stocks, let's take a quick look at like Priceline. What's that doing? Let's see, I guess, Laz was probably talking about retracements here and whatnot. So, I'm not going to really get into that, except for, for me taking a broad look here based on this. At this point, you did have the outside reversal. You had the nice short. Potent down day, I guess, with Apple yesterday. Took back half. If you look at the strength, Apple was able to take back the whole day. Priceline wasn't. Priceline, to me, I really don't like the story there at all. I don't really trade it that often because I don't believe in the name, and I lost a lot of money trying to short this way back when. Here's a little rising channel, broke to the downside. Here's your new pivot. I would say watch this halfway point. Right now, the bears are still in control of that one. If you want to quickly go to some of the other names, I don't think the ags are anything worth talking about, but some guys mentioned it to me today. Could you take a look at pot? Going to look at pot, and nothing, just off the lows here. Let's see what CF looks like. Still hanging around. I tried being long this on the Goldman upgrade on Friday, got me out. This still, to me, looks like one of the best ags. Above 191, it can continue. While I was away, I got stopped at a Zenga. Sorry for this one. It's just really a piece of junk. I've lost a lot of money, trying to buy the dip here. This was, when we had some success when it broke the IPO high. This was your shooting star top, which if you look at it technically, the reason why I've been all over this is because every sales trader in the world says they love it. And obviously all these salesmen, I guess, are a bunch of salesmen. But anyway, here was your reversal top. If I looked at it technically, came in, retest, turned lower. And then finally they did the secondary. And if you look here, also right there, broke down, retest, continued. I tried it again, and then I got stopped out while I was away right here. And now I really have no interest. I guess if I see some type of reversal, I tried it here and it hurt, I'll try and get back. But at this point, if you have a real long-term thesis, you better make sure it's long-term as a trade. It was a decent trade in the beginning. I was blind to see this shooting star top, and then when it broke below, because of all of the guys on my IM telling me thing's going to be 2020, 2020, and now it's at 1030. So it is what it is. Ren was a different story. Ren was a nice trade, a nice chart pattern. It held the course. It actually, it showed a constructive trade. We were getting involved at 570, 610, 620, and I think I sold the last of mine when it did a small, short-term top at I think 730. Let me take a look here. This one I wasn't ignoring. This one I'm not getting away from the red dog reversal. Here is where we started getting involved right around this area, added when it went above 630, and then it did a red dog reversal right here, and this is when it left my virtual trading floor, probably around this 740 area, and now let's see if it holds higher. To me, for this to stay in vogue with pent-up momentum, it should not break below 660, so let's see what happens here. Okay, hopefully you sold some into that strength. This was an unbelievable trade during a weak market, and now we'll see if it can go sideways. And I got to wrap it up because I haven't been here the last few days. I got to go into my partner meeting. As far as the market's concerned, I think at this point the market penetrated a little bit further than some of the bears would have liked. You have to make it's more of a neutral approach as far as some longs you like, some shorts. I think you still got to be more of a market timer. You can't be all in. Continue to take trades. Short Apple last Wednesday, Thursday was the way to go. You know, today was buying, tomorrow might not be buying. You know, it all depends on how it acts. The banks buying them into earnings and then selling them after earnings. You know, these are the things that happen on Wall Street. Okay, JP Morgan was a great buy for those 3 days that I held it long and then I sold it. Not just because I don't hold it into earnings, but even if I did, it was up and you could have shorted the news. You know, buy the rumor, sell the news. It was a decent report, and now maybe after sifting out, it can go again. But you know, a lot of people don't understand why things happen, and you have to see where these stocks went from, where they closed, what kind of report came out, what the street was expecting, what the whisper number is, and put it all together and see how you can maneuver it. And that's what we'll continue to do for you tomorrow. Jill's coming in for the morning call. I'll see you then. Have a great night.